So what we're going to be running through today is how to raise private finance. I think first and foremost, what we'll do, we'll just have a little look at the CRM. And I know a couple of the guys have done this before, and it's about utilizing the CRM and the investor database to raise private finance. We put deals on there to be sold for a fee, but then also we can use it as a tool to raise private finance. So you can put a deal on to the CRM, reach out to the database. But what you're doing is you're advertising what the deal is, the metrics, the numbers, but what you're offering is a fixed return on that. So what they do, you could offer around about 20% per annum fixed return on, let's say, for example, we've got a HMO. You need 50,000. That's going to go towards sort of the refurb, any other sort of upfront fees it can help towards. And what you're offering is 20% on that 50,000. And you can also key that into the deal calculator to see how that works on the numbers to make sure there's still a margin there. And what that is, that's just someone, it gives them the opportunity that they're not physically buying a deal, but they're happy to be getting 20% over a number, over this term that you set yourself. And what the first sort of questions that will naturally pop up for that is, okay, how long do you need it for? How much do you need? And sort of when by, and then also what's the security involved? And there's multiple ways we can get into offering security. For example, the first one would be you can have a loan agreement and a personal guarantee. That's the simplest way, probably the most cost effective way. You've got a loan agreement between you and the investor, and that's both sides, and that's a legal document. Then that's providing security for both of you. You can also have an RX1 that runs alongside that, which is a restriction, and that's just a restriction placed on the property, so you can't go ahead and just sell that, or they can't go ahead and sell the property without either of you agreeing and giving consent to do so. So that's just another layer of security. I suppose the highest level, which I would only be going in at if it was a significant value, or they were putting 100% into the deal, would be a first charge or a second charge. Often, if you're using Source Capital, they've already got the first charge, so you could offer them a second. But if you were buying, say, cash, and it was outside the Source Capital, you could offer someone a first charge on that property, and that way they've got, if anything goes wrong or anything goes not quite to plan with that, they will get paid first because they've got the first charge. They'll get their money back, and then you will get paid secondly. I think another way as well, what you could do is you could purchase the property in a company, in an SPV, and they can actually own shares within that company. And then as they pay you back each month, or as they pay you back annually, those shares diminish. So then they're fully paid back. They've then got no shares left within that company. Other ways we can look at using private finance. So you can have vendor finance. And it's always an interesting one to use this, because naturally when you submit an offer, you put it on the table, and that's your offer to purchase the property at that agreed price. But what you could also look to do is say, what happens if I purchase this property at X amount, but settle the remaining balance upon completion? So you could have a property for 500,000, and the question you're sort of asking them is, do you need to understand their position? So do you need all this money now? And if they say, well, no, I don't need to move on. This could be an inheritance property. They've already got their own. I don't need the money now. I just want the most money I can get for it. We say, well, look, I can give you 500,000, say now for the property, or I can give you 510,000, but I will give you, say, 255 now and 255 on completion. So they're getting 10,000 more, so they're happy, but they've just got to wait sort of 6 to 8 months to see until it completes, and they get the rest. And that's an example of the vendor. What they've essentially just done, instead of you putting all that money up front, and also you can limit the costs on exchange. So you've limited your outgoings, and that way you can use that money to then refurbish the project. And that means less finance costs for you, and you're pushing everything to the back end. So essentially, you're using the vendor as a private investor. You could also, instead of just offering them sort of 10,000, you could also say, okay, I'll give you the 250, but I will give you a fixed return of say 5%, and they're actually paying them interest for loaning that money off them until completion. So that's just one way you could use private finance instead of going out. Look at the actual vendor. Another way is an assisted sale. By doing this, you're not actually owning the property yourself. What you're saying is the vendor could not actually, they could be in a position where they're struggling to sell the property, it's in a tired state. So what you're saying is, okay, I will fund the refurbishment, bring it up to standard, and then anything over what we agree to, I will take a profit margin on. And they're happy because they're getting the sale that they can't sell. And then also you're getting a profit on top because you're funding the refurbishment. But what we just mentioned a little bit earlier about reaching out to the guys on the database, you could put that deal on the app, reach out, raise the 50,000 refurbishment, offer them a 20% fixed return, and then go ahead and put that into the deal. So what you've done, you've used none of your own money, but you've got, and you don't even actually own the property, but you're getting a profit margin because you've used private finance to fund the assisted sale, and then also on top of that, they get then a 20% return. So it's just another way you can look at using vendors to help you with raising private finance. But moving on to building your own brand and using avenues like social media and podcasts and building your credibility, you're going to need to build a brand in order for people to buy into you and have confidence that they're going to get value from it. And in that way, what's going to happen is they will then be asking you, okay, how do I invest with you? I've seen your brand, I followed you from the start, I've seen your journey. I want to start doing what you're doing. Or I want to invest with you because I don't want to do property myself, but I just want to make a fixed return. And I've seen the returns that you're showing and the numbers and the value that you're doing. So with this, it's all about building your brand. So like I said there, social media, it's a powerful tool, big reach, and use this as a branding exercise. It's not a social media no more. It's a branding exercise. Increase your visibility, and really just with social media, it's about just being consistent and giving value and building that trust. And if you build that, then that's when you start to get business and you start to get private investors coming to you. And it can be as simple as just documenting your journey. It's not all about the end results. It's more just about people just want to watch, and it's a bit more connected and a little bit more realistic. They can relate to it a little bit more if they see you you show your mistakes, show the good, the bad, the ugly. You just showing everything and just documenting your journey throughout. And then be truthful, and also what you got to come to realize that when you're building the brand in the early stages, I think you just got to realize that just like real life, not everyone will like it. You will get people who'll comment and say, "Oh, I don't believe in you," blah blah blah. But just ignore it. That's just like people are like it. People won't. And that brings us on to sort of don't judge your success on likes and comments on social media. You're building the brand, so people will invest with you, so you can build your business. And you don't really want to judge on your success on your likes and comments. You just always have it in your mind. This is just a process. And then you can set yourself a strategy as well. So you can say, okay, I'm going to post 1 day a week, or 1 day post one a day, and I'm going to do a live every 1 or 2 weeks, and just show what you're doing. Even touch on some personal stuff. You can, if it's going to the gym or going to a viewing, you just start to gain followers and create an interest that's going to get you business. And again, I mentioned it there. Remember, it doesn't matter. Embrace your mistakes. Be yourself. And likes and comments are for ego, really. It's all just part of a process. What I've noticed in sort of social media at the moment, and you probably noticed yourself, it's more videos. You've got your reels, your YouTube shorts. So people like to see a video and what you're up to as opposed to a picture. So anything you can do, short videos, and it's when you're going through refurbishment, so sometimes the last thing on your mind is getting your camera out and doing a video. You're thinking, oh, I've got to make sure these are on site on time. I've got to make sure the second fix is going in on time and everything to do with the first fix is being done. And you're going to be really busy, but it's just taking a step back to think, okay, I don't want to get to the end and think, I never took any before pictures. I never really took any videos. I haven't really documented what I'm doing. So no one really gets to see. They just say, oh, okay, yeah, I just seen the end picture. It looked nice. But if you're documenting it, you're getting people's interest, showing what you're doing. And they could be the person that says, do you know what? I've got sort of 20, 30K in the bank. It's doing nothing. Can I put it into your next project? I followed you, the one start to finish. I want to be involved in that. And like, what's this property stuff you're doing? And that's who you want to attract. Networking, again, if you can get out to networking events, work the room, don't get caught up speaking to one person. Your goal is to speak to as many people because you want to try and get as many investors as possible. Don't be afraid to approach people, or maybe even try hosting a sin event. You can, I've done them. I was running the one in Birmingham, and you get to speak to a lot of different people who are all interested and they're all property minded. So it's well worth trying to host one, and just keep building your network and building that credibility. The more you can get yourself out there by building your brand, network, and social media, people are just seeing a little bit more credibility. At first, they might be, oh, I'm not too sure what he's doing, does he? But as it goes on, you'll notice those same people are start to show more interest, and then suddenly they want to actually part with the cash with you, which that's just that credibility starting to show through. We've got podcasts, so podcasts look professional, and if that can really boost up your credibility, because they just look that little bit more. I've seen there's so many podcasts out there on YouTube, and they're all doing the same. They're just trying to build that brand. And you can come on the Source podcast. We'll be more than happy to for some of the guys to jump on a Source podcast. You could even run your own, and if you get multiple people on it, that's just more presence, and again, just looks that little bit more professional. And all these things that were mentioned around podcasts and social media and networking events, it's what you're essentially doing is you're just finding the finance. And as a property professional, you shouldn't really be getting too bogged down with the daily grind of property and the trades and the building out. Your sort of sole goal is to look at finding finance and finding deals. They're your two key roles as a developer or as a property investor. And what this is doing is building the brand and allowing you to find that finance. And then there'll be other methods that you can use to find the deals. So this is all about finding that finance. So dealing with private investors. So you'll get to the point where you've done your social media, you start to document your journey, and someone will pop into your DMs. They'll come in and they'll say, yeah, what is it you've been doing? I'd like to meet up, have a coffee. I've actually got money ready to deploy. I want to invest. And at this point, that's when you think, oh no, I don't even know what to say to them. And this is around just building that one-to-one rapport with them, and it's remembering the stuff. I know they do it a lot on the NLP. It's all around sort of body language, match and mirror, your speech, your tonality. It's just being, you want to show that you're excited and passionate about property. You don't want to sort of get there, sit down and be like, oh, I've got this deal, and you're straight to, yeah, it works well. You want to show the excitement around it. You want to show the bigger picture, and you want to understand about them first. What's their goals? Why are they interested in property? Have they done much in property? It's all about them, and less about this one deal, because you want to work together with this person and push forward for many deals. And again, yeah, I've mentioned there, you want to sort of become a good listener, and you listen to understand, not just to think about your next reply. You want to take it in and really understand their position, and that way they'll feel more comfortable and confident to invest with you. I mentioned there, for the initial conversation, you can produce a business plan or a private finance document. Now, I've used this in the past, and what it helps with is when you're first having that conversation with the investor, you've just got something there to hand that you can show them. And as you speak, you're pitching it, and you find out about them, understanding their situation, understanding their goals and what they want to achieve, and then you're sort of, in a way, saying how you can meet them. You're a solution to what they need. But if you've got a document that's there that you can just say, okay, I've got this document. This is my business plan. This is what I do, and this is what you can really achieve. You've got that to hand to lean on. So if it does get a little bit uncomfortable in the conversation, you can go back to that. And I put there how you can present this to potential new investors as well, or people you know, friends, family, anyone sort of in your close circle. You can present it in a way that you're not sort of shoving it under the nose and saying, look, please invest with me. I need £50,000. You're just saying, I value your opinion. And what I'd like you to do, if you know of any, can you have a read through this? Let me know how it reads. Let me know how it looks. And if you know anyone that'll be interested. And 9 times out of 10, they'll end up reading it and saying, actually, I'm actually interested in doing this. What is it you're doing? And it's just a way of presenting something without shoving it in the face. But you're getting their interest. And then what to include in something like this. So you've got your private finance document, but it's a bit of like more like a business plan. It's your business plan, what you want. So you've got like an executive summary, so just a brief introduction on what you are, who you are, what you're looking for, and that you're looking for sophisticated investors. Business objectives, so your business growth, your targets that you want to achieve over the next sort of 3, 4, 5 years, what security you offer, the fixed returns that you offer, and also don't be afraid to compare these to the banks. I mean, you're offering these a solution that they're getting minimum interest in the bank, and if you're offering sort of 10, 15, 20% return, that's a lot more healthy than what they're getting at the moment, where it's just sitting in a bank somewhere when they could be investing that with you. And you can also, to really hit the nail home, is you can start to speak about inflation and say, with current inflation, it's actually probably eroding the savings in the bank, when you want to actually be surpassing the inflation rates. So if you work with us and our business, we can sort of grow together, and we can have a fixed return. Explain the investment and security options. So they'll want to know, how's the interest paid? Is it on an annual basis? Is it on a quarterly basis? What you're looking to do as a business, and just keep it nice and simple. You're looking at purchase and distress property, add value, and then either sell or retain. Just keep it nice and simple. And the minute you're adding value, that's offering them they've invested in a property X amount, and when you're adding value, that's just giving more security to them. Because if anything goes wrong and that property needs to be sold, you've added value. So you just letting them know and re-emphasizing it that what I'm doing with the investment is I'm actually making it more secure for you as it progresses. Discuss the legal charges, loan agreements, restrictions, and just demonstrate the security that you can give them, like we mentioned a little bit earlier on. Yeah, it's the private investors. They will want to know how much, by when, and how secure. That's always sort of the 3 big questions that they're gonna go ahead with. And you'll go through all this on the first one, and they'll want, what's the first charge, what's the second charge, what's the interest rate, and then you'll find at the end of the 12 months, it's always good to drop in sort of when they get paid back. If they've got, say, 50,000 that they've done, it's always a nice touch just to give them the 50,000 back in one transaction, and then drop the interest in of, say, 5,000 or 10,000 on the second transaction, and it just shows them exactly what they've earned, and they can look at it. And most of the time, there will be no sort of first charge, second charge, and all these extra security. It'll just be, can you just want that £50,000 back, and can we do the same next year? They said, yeah, that's fine. Quick loan agreement, signed, done, and then you just you end up just keeping hold of it, and eventually, what you can get to the point of, and you can actually offer them a little bit more interest on this, is you can say to them, do you want to just invest in me, in the sense that I'm bringing you a deal, and you're investing 50,000 into this deal. We've turned the project upside down, inside out, and you're comfortable with the numbers. But when they become really confident with you, they'll just say, here, say 100,000, just do what you want with it. Put it in 2 projects, put it in 3 projects, as long as I just see my return at the end of the year. And also, I want you to keep it for the next 3 years. So I don't actually want it back for 3 years. I want you to lock it in. And that way you just got 100,000, and you can play around with that for the next 3 years, put it in multiple projects. But that comes with a bit more credibility, bit more track record, and a relationship with this investor that you've built over time, and they've got confidence in what you've done. But that will come as it moves forward. Include your business strategy. So let them know what you're going to be doing. Is it buy to let? Is it HMO, refurbishment, commercial conversions? You can mention why property, why now. So you can have a brief description, just explaining it's an asset-backed, secure product versus other investments you could possibly be doing. You can explain to them a little bit around the market and why you're adapting your strategies to the way the market is currently going, and that'll help them give some more security again to say, okay, even if the market goes up or down, there's always a strategy for if it's going up or if it's going down, and that's what you're following, and that just gives them, reassures them there's a little bit more confidence. Your team, put your team out there, leverage sourced, let them know what we do, and then also put your own broker on there, your accountant, your solicitor, and it all just looks professional when you're sitting down with this investor and going through it. They're seeing all your team, seeing all the directors that are on there, and then also you can put on your experience as well. So have a little look what experience I've got, education, again, leverage sourced and projects and the training that you're going through. So you say, I've got all this training, I've completed all that. This is a project that sourced, I've done, and even if you've not specifically done it yourself, you're working with us, and we've done projects very similar. You can even go to the website, direct them to the development page, sorry, and they can have a little look at all the developments, and it just gives them a little bit more comfort. But if you have done deals, put examples of deals in there, your previous deal, your previous couple of deals, show all the numbers and how it's worked out. If there was an investor on board with that, show them how much they got paid for that, for investing with yourself. And then at the end, you're sort of looking at a conclusion. So just conclude it all up, emphasizing what you're offering investors, an opportunity to generate sorts of competitive returns over a short to medium term, leveraging our experience and network that's asset backed. So just again emphasizing what you can offer them, and then nail home the financial benefits, security, and just remain honest, and let them know it's not going to be a quick sort of get rich quick investment. This is something we're going to go into partnership with. I mean, working with over years to come on various different projects. So after running through those slides, I think what would be good for you guys to do is to take a bit away and upload the deal to the CRM, looking for investor finance. So find a deal that you normally source on, but instead of sourcing it, look to raise private finance. And even if the deal isn't sort of live at the moment, what you can do is that investor could reach out and say, I want to invest in this deal. But what you can say is, okay, unfortunately, this one's actually sold. This one's gone. However, I'll keep your name, keep your details, and the next deal that comes along, we'll sit down and we'll run through it together. And it's just you've just added an extra person to your database that it could be a potential investor. And what you're sort of looking at with raising private finance, you've got your portfolio of property which you're babysitting. You're making sure everything's okay. You make sure the maintenance okay. You're making sure rent's being paid on time, and you're babysitting your portfolio. You want to also babysit your portfolio of investors. You want to speak to them every couple of days, see what they're interested in, see if their strategies change, see if what they're looking for as a returns changed, and you babysit your portfolio. And with this, you're keeping it at the forefront of your mind that when you're having any sort of conversations with anyone, or you're out doing anything, you're always thinking, oh, okay, if I blah blah blah, I do property stuff, keep it nice and simple. You go, oh, I'll be interested in doing that. Oh, that's fine. If you've got your details, yeah, I'll catch up. We go for a coffee, and you just add them again to the list, and you just build this investor database. Start building a brand on social media and documenting your journey. I mean, start putting it out there, exactly what you're doing. You don't know, it could be friends, could be family, could be someone who's close by that they thought, oh yeah, he's doing a bit of property, but actually, what is he doing? I've seen it now. I've seen exactly sort of he's done this with this project. I've watched it from start to finish. I want to get involved, and it just that'll just help grow. Go to a networking event, and you can go to a few sin events, or go to external ones as well. Even role play and practice that first meeting with a potential private finance investor. Just sit down with someone and just get comfortable with speaking about them and understanding and listening to them, and not speaking about the deal. And you can go away and you can sort of, there's loads of stuff out there on YouTube all around the body language, the matching, the mirroring, the building rapport. Just have a little watch of some of them, and have a go at being comfortable sitting there with an investor for the first time, and pitching sort of what you got to offer. And again, use that document if it helps. Some people don't have a document, they just find, they sit down, and the document probably in the end will maybe dwindle away a bit, because you just sort of, you can say, yeah, I've done this deal, and it's all there in your head and you're very confident at delivering it. But at first, at least it's just something to lean on. And if you feel a little bit uncomfortable, get a bit stuck, you can just open it up and say, well, this company, this is my objectives, this is what I'm looking, this is what I'm offering, these are the opportunities. So yeah, start to draft one up, create a business plan. These slides will be on the training portal, so you can go out. You can go in, have a little look at these, and just start to get a bit of a draft template business plan together. Even have a little look online. You can see there's plenty of stuff out there for templates for business plans. So just have a little look and get that all together. At least you've got it there to hand if anyone asks. So summary and key takeaways. So leverage the source database bank of investors by reaching out on the app and seeking for a fixed return. Always have vendor finance in your toolbox when submitting offers. Social media, podcast, networking, build a brand, and just really tell people what you're doing and keep building that investor database. Research how to communicate with people, body language, match and mirror, like we just mentioned then. Go on YouTube, have a little look at some of those videos, and create a business plan or an investor proposal document.